Hello again. Welcome to another episode of the Uranium Market Minute. Today is Monday, April 18th, and this is episode number 107. My name is Justin Huhn. I am your host. I'm the founder and publisher of the Uranium Insider Pro Newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. All right, first of all, I wanted to say thank you to all of our supporting members that joined us this morning on our April monthly Uranium Insider Pro webinar, our members webinar. We had a really fantastic turnout, and our guest that did present in the second half of the webinar did a fantastic job and is a very, very exciting story that this company is working on. So thank you again for all of that support and for attending live. And of course, that will be up on the website later this evening for a replay for any new members or any members that did not get a chance to attend live. Uranium market down a little bit today and looking like a little short-term pullback, not a big deal. Let's go ahead and run quickly through the daily scoreboard and through the charts, and then mailbag section is also going to be quick. I apologize, running on a little sleep based on a very busy morning. All right, jumping right into the daily scoreboard, the spot price of uranium holding strong, 63.75 a pound mid-market, not really budging here. Spot has not been in the market very heavily over the past couple of weeks. They've traded at essentially a discount to NAV since the 5th. That's about 10 days, 10 trading days. And they closed at a substantial minus 4% discount to NAV. Looks like we're going through one of those cycles where Spot's discount to NAV kind of puts a pause on the entire sector, including and especially the spot price. Although the spot price is not being sold down in the absence of Spot. Very interesting to see that indeed. They did not raise any new capital, nor did they buy any pounds yesterday. Still, their year-to-date numbers are incredible. 13.6 million pounds purchased, 748.6 million in new capital. And that's just in the first, just over 3 months. All right, turning to the sector equity ETFs, URA reported another one-day increase in outstanding shares, 320,000 shares issued. URNM reported no increase in outstanding shares. That new issuance by URA led to a mandated buying of 6.3 million. The inflows in 2022 for these two ETFs are significant, $779.5 million of mandated buying coming from the inflows into these ETFs year to date. Absolutely huge. Again, the sector was down a bit today. Why don't we look at the charts? Decent pullback in URA, just north of 3% down on the day with decent volume. Looks like we've got a little bit of a short-term overbought situation, slightly overbought, not severely overbought, just taking a little bit of breather in the middle of this run, in the middle of this accumulation cylinder. Not everything goes up in a straight line. Sprott Physical Uranium Trust also down significantly, 2% on the day. They're likely at about a 5 to 6% discount to their net asset value. We did see some dip buying come in intraday, but this is the largest discount to NAV that we've seen since we saw back in mid-March was a significant discount to NAV on that sell-off in the middle of March. That was almost around a 10% discount to NAV. And of course, that was an arbitrage opportunity for long-term investors that recognize that it is highly likely and historically significant for Spot to revert to the mean and get back to trading closer to NAV. Assuming the spot price stays the same, you can make a quick 5%. And it's likely that investors were taking advantage of those intraday lows and that discount to NAV. Let's look at Cameco, which has been a sector leader. Cameco was down about 2.5% on the day. Again, still well above even that rising 20-day moving average. So nice to see for Cameco as a sector leader, even though we're down a little bit on the day, taking a little bit of a breather here. And like I said, not everything goes up in a straight line. Perfectly healthy within an uptrend for stocks and sectors to pull back a bit, and that's exactly what we are seeing here. All right, mailbag section. I want to talk about a piece of news that was shared around today by myself and others. An article came out on Bloomberg talking about the Department of Energy in the United States announcing some support for potentially for life extensions for nuclear, a $6 billion support package for life extensions for domestic nuclear reactors. Yes, this is true. This is part of the $550 billion infrastructure bill that was passed last year, and they are dedicating $6 billion to supporting nuclear reactors. How is this going to work? This is called a civil nuclear credit program, and it will help to delay scheduled plant retirement for plants that are at risk of closing due to economic reasons. So in the United States, we have deregulated and regulated markets. And the regulated markets will not allow the prices, let's say, to be gouged or to be competitive with other industries of electricity generation. So nuclear tends to be a little bit more sustainable in those situations. The deregulated markets, however, nuclear has to compete with other sectors, and that obviously is easier and more difficult depending on where the competing energy costs are at, with solar, with wind, with the price of natural gas, et cetera. So a lot of these reactors that are being shut down in the past decade in the United States have been in deregulated markets, and typically these reactors are shut down due to economic reasons. So this is a big deal for the DOE to reconfirm that program and to say, hey, if you're running in a reactor in the United States and you're at risk of closure due to economics, make a bid for this. We've got some money here to support you. Apply for the civil nuclear credit program, and perhaps they can get support from the federal government, from the Department of Energy, to keep these reactors online in the name of supporting clean energy. This seems like an obvious no-brainer from the outside. When you see that 20% of the grid in the United States is being powered by safe, reliable nuclear energy, why would the government not support it, since they've had subsidies for pretty much every other industry, especially renewables? The DOE will issue new guidance this week, giving utilities more information about how to apply for the program. So, and they said that there will be about a 30-day application process to apply for those credits. Now, there are very likely nuclear reactors in the States right now that are not necessarily on the chopping block, but on the edge of profitability, especially with rising fuel costs right now. So in considering that the entire fuel cycle is moving up in price, this is a well-timed program to help any utilities that are on the verge of having to close reactors because of a lack of economic viability, when clearly they are so vitally important for not only energy security, but of course, clean energy here in the States. So that's a very good thing to see. Just another brick in the wall in terms of bullish developments stacking up here. I'm very pleased to see that, and to see this bipartisan support for nuclear coming across the table in the United States. So that's a very good sign. All right, I'm going to keep it short today because it's already been a very busy morning, and I hope that everybody had a great Easter weekend, Passover, Ramadan, whichever you celebrate, or none at all. Had a great weekend either way. I definitely did. And let's see if we can reconfirm this leg up here in the next few days of this market. All right, take care. We will see you tomorrow. And one more piece of housekeeping here is that I will not be in the office Wednesday to Friday this week. I am again taking another boots on the ground trip to do some due diligence out in the field. So unfortunately, I will not be doing a Uranium Market Minute Wednesday through Friday, but I will be back the following Monday. But I will see you tomorrow. Take care. Cheers.